On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice and it doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners financial advice provider disclosure statement, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Please engage with us. We love to get feedback, questions, and comments on this material, and if you enjoy it, please rate it, or even better, share it with a friend or colleague. G'day team, hope you're all well, enjoying your long weekend. Let's run through some of the things we saw across markets last week, then let's turn our attention to what's coming in the days ahead. And the last 7 or 8 days, in particular in the United States, have been very eventful. President Trump imposed a 50% tariff on the EU, the European Union, before he then delayed it by 5 weeks. Then we saw the US Court of International Trade rule that many of the tariffs are illegal anyway. That then saw the Court of Appeal grant a temporary stay that leaves them in place while the case is considered. And then Trump ended the week by doubling the tariffs on steel imports. So it's been an incredibly busy week, especially on the trade front. The S&P 500 index in the US still managed a healthy 1.9% gain last week despite all of that, and it ended the month of May up 6.2%, which is a great return. That's actually the strongest monthly gain since November 2023, so not last year, but late the year before that. Major indices in Japan, Europe, Australia, and the UK were also up last week, and while we did see emerging market equities slip back, down 1.2%, all of those regions posted healthy gains for the month as well. Locally, the NZX 50 was down 1.4% last week. We saw a raft of results, and most of them were pretty good, but I think there were a few cases where investors were looking for more in terms of outlook commentaries and guidance, so there was a bit of volatility through the week. We also saw a sell down in EBOS Group from a major shareholder, and that did weigh on the market. So the NZX 50 down slightly last week, but it still ended May up 4.3%, which is a good return just for 1 month. That's actually the best monthly gain we've seen since July last year. And if you look back over the past 5 years, that is the 7th strongest rise in 1 month. So not too bad. Interest rates, bit of a mixed bag. The US 10-year Treasury yield finished the week lower, down at 4.4%. However, here in NZ, our 5-year swap rate was up slightly. It finished the week at 3.67%. We'll talk about the Reserve Bank decision and the outlook commentary there shortly, but markets did interpret that Reserve Bank forecast set and some of the comments as being a little more hawkish than some people had expected. Right, so what did we see in terms of key events and releases? In the US, we got some more good news on the inflation front. This came out on Friday in the US, so it was Saturday morning New Zealand time that we got these figures. The Personal Consumption Expenditures Inflation Report, so PCE inflation report. This is the Federal Reserve's favoured inflation measure. It moderated more than expected in the month of April. So for the month of April, we saw the headline and the core PCE rise 0.1%. That was in line with expectations. But when you look at the annual rates, they were a little bit softer, or at least the headline was. The headline PCE inflation rate slowed more than expected. So it came down to a 7-month low of 2.1%. And the core PCE inflation rate fell back to 2.5%. That's the lowest we've seen since March 2021. So good news on the inflation front in the US. Still wondering what the tariffs will do to future inflation, but for now it's under control. Right now, markets see 2 rate cuts from the Fed over the balance of this year, 2 25 basis point rate cuts that is, and the first of those, so the next move, isn't expected till September. So they're still very much on hold, but over the back end of the year, markets are hopeful that we will see a couple of rate cuts from the Fed. Here in New Zealand, it was a busy week, and the highlight was the Reserve Bank decision. So the OCR was cut by another 0.25%, 0.25%. That was expected. That was the sixth cut we've seen since August last year, and it takes the OCR down to 3.25%. So remember, the peak for this cycle was 5.5%. Now we're down at 3.25%. So that's the lowest since 2022. That's good news. We also got a monetary policy statement, which is a new forecast set that was highly anticipated compared to the last one, which came in February. The new projections did signal a weaker economy this year, but then a stronger rebound next year. The Reserve Bank's got unemployment still pushing up a little bit. It's currently at 5.1%. They still see it pushing ever so slightly higher to 5.2 before starting to decline. On the inflation front, inflation currently 2.5%. They see it going up a little bit to 2.7. A lot of that is kind of temporary one-off stuff. Then they see it falling more quickly than previously thought. So they do see it slipping below the 2% midpoint in the first 6 months of next year. So inflation's still very much under control in the eyes of the RBNZ. The rate track for the OCR was what everyone was really interested in. They did lower it slightly, so they've penciled in one further 0.25% cut compared to what they had before. So that really brings them into line with where financial markets were already at. So right now, the Reserve Bank is saying, well, we'll cut rates one more time. That'll take us to 3%, and then maybe we'll cut again after that, but it all depends. So markets are kind of in the same boat. They see the OCR either falling to 3%, which would be one more cut, or they see that and then a further cut, which would take it down to 2.75%. So the pricing has been moving around, and ask 5 economists, you probably get 5 different answers, but markets see the next cut as likely coming in August, which means we'll get a no change decision in July, and that might be the last one, or there might be one after that, depending how things play out. So I guess you put all that together, and what does it mean for investors, for borrowers, for savers? Well, I guess it means that most of the decline is behind us in the OCR. We've seen most of the move. There's a little bit more to come. We don't know where the ultimate bottom is, but we're getting close to that level. So that doesn't mean things are as good as they get, because you have got to wait for those lower mortgage rates to actually wash through the economy, because most of us opt for fixed rates, and so we still need to see people move off their current fixed rate onto the sort of prevailing lower rate. So there's still a bit of positivity to come in terms of economic activity and the impact of these lower interest rates, lower mortgage rates, lower OCR, but don't expect a raft of OCR cuts over the balance of the year. The Reserve Bank is almost done. They're almost at that point where they go, that's low enough, and from here we will just see how things play out. Business confidence. We also got some business confidence figures. This was the ANZ Business Outlook for May. Headline confidence actually fell quite a bit. It fell from 49.3 to 36.6. That's the lowest since July last year. The own activity measure, similar moves. However, I guess more positively, ANZ did note that there was a big change in tone and responses when you look at early May responses versus late May. So if you think back at all that volatility and all that news flow around trade in May, early in the month, people were nervous and the responses reflected that. Late in the month, there was a lot more optimism. So hopefully that gives us some confidence that businesses are still in reasonable heart, and we can take that more positively. Inflation pressures eased slightly in the survey. The net proportion of firms intending to raise their prices over the coming 3 months still elevated at 45% or thereabouts, and there's a key measure of cost pressures that's still higher than we would like, but coming down ever so slightly. Looking ahead to this week, and it will be a busy week, obviously a holiday shortened week here in New Zealand with the King's birthday holiday on Monday, so the market will be closed. After that, we will get the terms of trade, and we'll get the results of the latest global dairy auction on Wednesday morning. And the dairy sector is obviously in very good heart. Things are going well. Last week, Fonterra reconfirmed the payout for the season that's just ended will be $10. That's the highest of all time, so fantastic news. and they did provide an opening forecast for the new season, the 2025-2026 season, of $10 again. So that's back-to-back $10 payouts that we're hopefully headed for, which is great news. There's a wide range in terms of their estimate set. They're going for $10, but they've also put a range around that between $8 and $11. I know 10 isn't the midpoint. Don't ask me why it's not quite the midpoint. But the reason they do give a wide range early on is because a lot can change. Demand's pretty good, but you've got all those geopolitical tensions. You've got all that uncertainty. But fingers crossed that we do have those back-to-back double-digit payouts. Internationally, it will also be a busy week. We will probably see people refocus on some of those economic indicators, particularly in the United States. We've got the latest ISM manufacturing and services indices that are due. We've got the monthly jobs report in the US. We'll be watching China PMIs, inflation in Europe, and wage data in Japan. A couple of those US releases will be really interesting. I think on Monday you get the ISM index, the manufacturing index, and then on Wednesday you'll get its services counterpart. These will be useful as we try and look for any further evidence of how the tariffs and trade tensions are impacting the economy. And then obviously on Friday night, so it'll be Saturday morning New Zealand time, when we get that labour force report, and we'll get to see where the unemployment rate is at, and we'll get to see how many new jobs were created in the month of May. Markets are expecting 125,000 new jobs for the month, and the unemployment rate is expected to remain unchanged at 4.2%. On the central banking front, a lot of Fed speakers are out on the circuit. So I think Jerome Powell is on Monday. That will be the highest profile one when Fed Chair Powell speaks on Monday. We've also got rates decisions in Europe and in Canada. And that European one will be interesting. I think this is on Thursday night. The ECB expected to cut its policy rate by another 0.25%. That would take them to 2%. Well down from 4%, which is where they were at last year. We've seen good progress on inflation in Europe. Annual headline inflation sitting at 2.2%. And I think we get some new figures on Tuesday, don't we? So that's 2 days before the ECB decision. But this is not expected to be the final rate cut from the ECB. Markets see another cut over the balance of this year, and then maybe even another one in 2026. So they could end up at 1.5%, 1.75%. But Thursday, the ECB is expected to cut interest rates. On the corporate front, it's a little bit quieter. Obviously, all of those results we saw in New Zealand do wrap up the May reporting season. Haven't really got anyone on my list to follow in New Zealand or Australia, actually, in terms of corporate earnings. Internationally, we had Nvidia last week. That was very closely watched. This week, there's a few more. No one as high profile as Nvidia, but we've got the likes of CrowdStrike, Dollar General, Dollar Tree, Broadcom, and Lululemon all reporting. So that is how the week is shaping up. It's a shorter one here in New Zealand because we've got the long weekend. If you're still listening to this on your long weekend, thank you, much appreciated. Anyone who's travelling, take care, stay safe, and enjoy your week. We'll talk again soon.
For more insights, visit craigsip.com.